Good afternoon. Hi everyone. So I guess I've said for pushing 2 years I would do an update to the supply and demand original video where I just showed how I draw zones to show how you enter on those zones. And it's taken me a while, I think, because there's so many different options for how to do it. And I use various different strategies depending on what I see on the chart at any time. So every time I've started trying to write something or deliver something to show how I do it, I end up kind of getting lost down a rabbit hole. But finally I've managed to write a document about it, and to be fair, actually a lot of it is not really to do with supply and demand, but I wanted to make it clear that you don't have to have a supply and demand strategy for your actual entry. I do, and you may want to, but it's much more time consuming than various other methods of doing it. And, to be honest, you should probably, be back testing all possible methods to see what works for you. The other thing is that obviously it's very much dependent on how much time you're willing to spend trading and your lifestyle and things like that. So, there's much easier ways for entry if you're willing to have a lower win rate. If you don't want to spend as much time at the computer, if you're doing it as a full-time job and you're a scalper, then obviously there's better ways of doing things, that involve a lot more time and more skill. And I don't think anything's particularly hard to learn given the time to do it. But yeah, it's just finding a strategy that works for you. So anyway, I've kind of updated my colors document, which is what you can see on the screen here. So originally this was just to show the colors of the zones that I use so people can follow the charts that I share, and a brief overview of what supply and demand is. I then have updated, so it's now 3 pages rather than 1, so I've updated below how to assess a zone and how to determine the strength of the zone, and I'll come back to that in a little bit. I'll share this document in the comments, so you can, you're probably wise to print it out so you can have a look at it while I go through it. And I'm doing this a bit off the cuff as well, so I don't know how easy it's going to be, or how much I'm going to need to flip back and forth to the charts to actually give examples. Second page, I'm talking about trading strategy considerations. So as I've just said, you need to consider your time commitment, your capital, your experience, and you shouldn't really, I was mulling over having put capital here, I think you shouldn't really spend, to develop your strategy around what capital you have, but that's more to determine, if you're going to be a full-time trader and what your income requirement is. If you have a vast amount of capital and you can take a few trades a month, a few trades a year even, with 1% risk, and that's going to give you enough income, then great. Alternatively, if you're watching this video, you've probably got lower capital, and then you still want to risk the same 1 to 2% per trade, but you might need to take a lot more trades to cover your income. So you need to, and really you should be developing a trading plan and writing your own detail for that. So yeah, when you're considering all these things that I'm about to go through below, consider what's going to work for you, and discard anything that's just going to be too onerous for the lifestyle you have. And again, things like if you have a family, if you have a full-time job, that you may not be able to be on the charts that much. So timeframes is probably the most critical thing of all this, and probably when I see most people fail and where I've struggled myself as well. So everyone's got their demons, and mine's always been entering too low time frame, or having a too low time frame entry strategy based on a relatively much higher time frame zone. So for example, if price hits a weekly zone, you don't want to be entering on a 3-minute chart. Or if you do, then you can, but then you need to scalp it. So for me, it's been kind of trying to enter on a 3-minute chart, and then hold for the weekly target, but that's far too low for a weekly zone. So I've kind of resorted to going much more into scalping. Like, I haven't got the patience to hold anyway. So again, it's whatever works for you. So at a minimum, I've said you need to find a single or combination of timeframes which works. So like I say, you can use just a single time frame. Use if you're a long-term investor, then maybe you would just use one high time frame zone, so monthly, weekly, and then work your entry strategy from that. If you then have a low time frame supply and demand entry strategy, maybe you'd use the 1 day or 3 day or 12 hour for your entry. For a swing trader, like if you're holding for a few days, or if you're holding, even for just a single day, but for a longer period in the day than a scalp, then you might want the mid time frames. And I guess this is kind of what I prefer for entries: the 12 hour, the 1 day, or the 3 day. And then maybe use a couple of time frames below for your tight entries. And for me, that will go down to 1 hour and 15 minutes even. But like I say, for me, it's very it depends on what I see on the chart at any given time, so it's hard for me to give a specific answer here. But like I say, for you, just work out what works. Scalpers, and I do think you can trade off any high time frame zone. I mean, some people would say, well, you're a scalper, why would you look at a weekly or a monthly? But I've actually seen a lot in FX. I see a lot of people fail. In fact, in crypto too, because they don't look at the higher time frames. So I'll see, crypto people, as you've seen, calling for alt season, etc., when prices are going into monthly supply. And I just think, okay, yeah, you may see, multiple days of uptrend, and you may feel like you're bullish on that. But if you're at monthly supply, you're at monthly supply. And then, like I say, scalpers can trade from any high time frame zone. So, if the price does hit a monthly supply, the chances are you're going to get some sort of a reaction like fairly soon in that zone. Again, depending on the structure, but a scalper could trade an immediate reaction off that zone. And then you may find, and the other issue there is that high time frame zones can take time to play out. So you might get that immediate reaction on a monthly supply, which you could take a short, but then it might take weeks, days at least, but weeks to actually do a full reversal from there. So what I would suggest on that is, once zones hit, then you want to really be picking, just staying with them. So particularly if you're a long-term investor, like I say, I'll get to the strategies below, but I think you can just really pick, if you're picking a monthly zone, then just follow the chart, and you can take multiple shorts. Like if you're on a monthly supply, you could take multiple shorts off it at various different levels, but just keep an eye on it, because until it's broken, it's still a monthly supply, and it's still probably eventually going to give you that bigger move, particularly if it's a strong zone. So yeah, that's kind of what the notes in the time frame section. So market trend. It's worth considering what the whole market's doing when you're looking to take a trade, and to check you're in the right direction, because if you're very much counter what the overall market's doing, or the market isn't ready for your big move that you're looking for, then you might find it's just going to take a lot more time. Having said that, if the market is ready, like if there's been a big dump or a big pump, then and your entry or your zone is one of the last to hit, then you might find there's a quicker move. So it's worth being across what the market's doing. And for crypto, obviously Bitcoin itself, and then the market cap and dominance charts are useful, and I particularly use US dollar dominance. I also use the Bitcoin career chart for Bitcoin, because again, confluence between the two of those tends to give me a better more reliable zones, but also better timing. So quite often, if career isn't ready, then the US dollar pair might hang out until career catches up. I've found that quite commonly. And then for FX, obviously I think a lot of people use the dollar, but I also use all the other indexes and the majors and the cross pairs at times as well. So for example, if you've got euro US dollar is at demand, I also tend to want the dollar to be at supply, but then I tend to also try and look for pound US to be at demand, Aussie US to be at demand as well. Because then if I expect the dollar to drive the move, then when they're all ready, then they'll all move together. And similarly in FX with the cross pairs, if you're looking at, for example, the Aussie dollar, if you're looking at Aussie US and you want to long it, then it helps if Euro Aussie is at a short entry, because the two quite often move opposite to each other. And some of these things depends on what's driving the move, but those things are always worth considering. The only thing to add in crypto, I have to put that in the second paragraph here, is what you can think is a strong demand or a strong supply can easily not be strong if the whole market's against the move. And that used to happen a lot more historically. It's less common these days. I think, I do see alts moving a little bit more independently of Bitcoin. It helps with the timing as well. Like, even if a strong zone is going to hold, again, if the market is ready to reverse as a whole, then that zone is more likely to play out. And anyone who's familiar with trading crypto will know that alts tend to wait for each other. You'll find a few will start to move and then everything starts to move. So even, you don't need to be early, because if you're early on something, then you'll find the rest of the market will catch up, and that may mean your zone will break, or at best it will mean your zone will go sideways until the move is ready. So those things are worth considering. Local trend, I've said here, needs a document of its own, really. The easy answer is it's a series of higher highs and higher lows, or lower highs and lower lows. But obviously that depends dramatically on what time frame you're looking at. So it's more challenging. People make it sound very easy, but I actually think it's more challenging, and it's harder to explain. But what you really want to be aware of is when you're selecting your high time frame zone, is if you're with the trend or counter trend or anticipating a trend reversal. And again, even that statement isn't necessarily that easy. Like if we look at Bitcoin here, we're clearly in a monthly uptrend, we're in an annual uptrend, and they're all people who say they never trade counter trend, and again that's fine, but does that mean you're missing shorts from December 2017 to January 2019? If you're an investor, that's probably fine. But if you're a trader or a scalper, then obviously you want to be trading both directions. So you need to kind of try and figure out what the trend is on the time frame you're using. And there's a couple of things that can help you with that if you're struggling. This indicator, SCL True Market Structure, which again I've noted in the document if you can go and search for it. It actually gives you the if you go and look at the Pine editor at the bottom here, which is obviously going to be awkward now and not load. No, it's still there. Whoever wrote this actually gives you a full description of what rules he's using to confirm a local high, a lower low, etc. So you can actually go and read all his rules. I did go through them once a couple of years ago, and I can't remember the detail. I didn't necessarily agree with everything. But you could use an indicator like this on whatever time frame you're looking at. So say you're trading on the weekly to determine if you're bullish or bearish. But again, like I say, it's not necessarily that easy. For example, in here, you've got a higher high and a higher low, but then you've got a lower high and a lower low. So do you turn bearish at that point? For me, so the other option that you could use that I've seen people use is the moving averages, so EMAs or just a simple moving average. But you could say on whatever time frame you're looking at that you're only short this if you see, for example, the blue and the green cross. But again, that's things you have to work out on your own because obviously you need to back test to see what works and what doesn't. And I've seen a lot of people trade with moving averages very successfully. I think they're better on the high time frames. But for me, I'm maybe a bit too OCD on the analysis, and I'll always look back at the chart when I'm trying to back test things and see points where it wouldn't have worked, and then I tend to discard it. But again, might be useful for the lower time frames, and particularly I think when we're in very bullish crypto trends, I see a lot of people use these on the alts just for confluence of entries. So now and they literally will just trade. You can see, you get trades here off the moving averages. And again, for me, while I can find points that they've worked, I can also tend to go back and find points where it hasn't worked at all. So. But yeah, those are sort of methods you can use to determine structure. For me, let me just hide that again. I simply use supply and demand. So I'll say, okay, here, we're in a monthly uptrend. We've got a weak monthly demand here. I'll get into that. And until that's broken, for me, we're in a monthly uptrend. But that also for me doesn't necessarily mean I won't short this, because again, if you're scalping, then you can look at much lower time frames. And for example, we came off a 3-day supply yesterday, so you could argue this is a possible 3-day downtrend being created. But as I said, in my recent Bitcoin analysis, for me, again, until we've got an up move here, we've got this daily demand that's bounding the bottom of this consolidation. Until we break that, this for me is still a bigger uptrend. While you might get within range, you get zones. Anyway, I'm digressing a little bit on that, but structure, like I say, is more challenging. So again, try and trade with the trend if you can. If you're not trading with the trend, that's fine, but you just need to be aware of what you're doing. If you're trading within a range, and then your zones will be weaker, yeah, so your trades might be lower probability, but doesn't mean they won't work. But then you may want to take profit quicker. So zone selection. So as I've just said, you can trade both strong and weak zones, but you just need to be aware the probabilities will be lower from weak zones. And weak zones and those within ranges can still work. But ideally you would only trade these if the larger trend direction is in your favor or for scalps. And you may want to wait for more confirmation, lower your risk, or take profit more quickly. So similar example as to what I've just given, that here we're in this range, we are in a bigger uptrend, so you may consider you want to hold your longs looking for a new high on each of these tests, and you may want to sort of say, well, your shorts, you've got short zones above, but they haven't broken demand yet, broken significant demand, and therefore you may want to take profit quicker. So again, it's up to you how you trade those, but it was just making those comments on selecting your zones. And then with your stop loss, for the most part, it should be on the other side of the zone you're trading. So if you're trading a 3-day supply here, then your stop should be above the 3-day supply. And again, that's up to you to some extent. Just find my drawing. So obviously in this case with your 3-day supply, there's a swing fair above it, so that's good, decent. But you run the risk, so like Bitcoin's starting much more to follow traditional finance now, so it is much more inclined to do stop hunts than previously. So in the case of this, if your previous high here is very close, you may think, well, it's wise to put your stop on the other side of that all-time high there. Alternatively, you can put it above the 3-day if you want it tighter, but again, that's something you need to back test to see, whether you're getting stopped out more frequently, journal your trades, and I'm also looking, the other thing I'm looking for is around these zones. So if you, in this case of the 3-day, you've got equal highs just above there, another little high just above that. So I would look at this and I would kind of go, well, if you were holding this for a bigger move down, which is still risky at this point, but let's say that's what you wanted to do, in this case you might put your stop up here, or at least go in half size perhaps, and then wait and see if you get the reaction first, just on the basis that it's left quite a few equal highs up here, and then that all-time high, and that it might still go and take out stops above. But again, that's something you need to back test according to the time you have. But if you want it to be, it really is as simple as saying, right, we have a 3-day supply, I'm entering there, my stop's above the 3-day, and letting it play out. So yeah, that's just considerations for overall strategy. So zones, go back to zone selection. So hopefully you followed me enough to know what colors I have, so I won't go through into the detail on that. The strength, as I've said here, this aspect is most open to debate as to what zones you want to trade. And again, like I've always said, and why I've railed against doing this document is because I think I've learned so much just from putting charts together, and I think I said that when I did the original video on charting Bitcoin, is by putting these charts together, you learn so much, and you can see what zones have worked, which zones haven't worked, which zones have been tested, which zones haven't been tested. And Bitcoin is not easy. It doesn't like to come back to test once it's taken off, so it will test lower time frame zones in between. So if you desperately want to be in Bitcoin, then you need to either FOMO in on lower time frames, or you need to just sit out. And like I'm more inclined when I look at charts like this to sit out, because for me it's a high probability entry if this had come to test here, but it never tested. So with supply and demand, you know, it doesn't have to test your zone, but what you're looking for is for a reaction if it does. Strong and weak zones. So remind myself where I am. Okay, so what you're looking at is how strong are the buyers or sellers you are wanting to jump in with, and that's, I guess, the key question. You know, when I even started looking at supply and demand and thinking about how the charts worked, that's what I was thinking all the time, and all the questions I have below here are essentially related to that. So first question, you know, did the zone break structure and close significantly higher or lower than the previous swing high or low? And the second question, did the zone break an opposing supply or demand zone, or a support or resistance? So for example here, you know, we've got a this is a monthly zone, or is it 2 month inside it, but there's a monthly zone there. Price has consolidated here for, I think, almost 6 months, and has broken up, and it's had a strong move away from the zone. At the same time, it's broken an SR level, and in this case, not an opposing. Well, I mean, you know, arguably that's an opposing supply, but in this case, it's broken an SR level, and it's had a significant move away from the zone. So therefore, if the zone is revisited, you would expect some sort of a reaction. And maybe I should use previous zones to see. So here, for example, we had a 3-week demand, consolidated for 3 weeks, broke hard away from the zone. There's no resistance in this case. When it comes back to the zone, you expect some sort of a reaction. Secondly, this again as an example of a weak zone. Once it came back, it then created a new 3-week demand in here. In this case, this 3-week demand pushed up, lower high, but managed to hold, and then pushed up and swing failed the high, or just took out the stops. So this isn't a significant move away from this demand. And essentially we're still in this range of this demand. So when you have a demand sitting on another demand, it tends to weaken it anyway. But when it came back here, it did give you a reaction. But by then, firstly, it had made new supply. Secondly, we know it's weak because it's struggled to make a new high here. So therefore, while we get a bounce off the level, it then proceeds to break back through it and search for lower demand. So that's an example of a strong one here, and then a weaker one here. Come back to my notes. Oh yeah, did it break an opposing supply or demand zone? Let me try and find an example of that. So here, for example, we haven't got the test of it yet. This is a zone that's broken, it's a decent move, all this supply here. So again, this zone, or arguably the start of this move, but in general, this demand, these buyers have broken supply. So again, we would probably expect a reaction if we come back to that zone. So those are zones that would be seen as stronger, and I gave another example of a weaker one there. Another consideration is, have stops been hunted? So like I say, like a lot of people used to equate FX concepts to crypto, and I used to think it was much less valid. But now there's so much of traditional finance in crypto, I'm finding that those stop hunts and those types of strategies are a lot more valid. I tend to find you see them more at the highs than at the lows, but you can get them at the lows like here. So in this case, for example, took liquidity and dropped back down. So when it came back to test supply, so in this case it could have come back to test the high, and arguably, you know, it didn't work here. But when it came back to test this supply here, you then get the bigger drop because it's taken, this zone has taken liquidity. So there's another example in here. I think hopefully this is a monthly, but let's just have a look at this down here. So again, this was finding slowly consolidating, slow move down. We had a stop hunt that just took out that weekly demand into the daily here and then moved back up. So again, you're then going, okay, we've stop hunted this low, or actually multiple lows here. We've had a decent move back up. Preferably this would break supply, but again, when it comes back to test this low, then you can look for your long entry. Same here on the short side, that we've made a high, we've stop hunted the high, and then when it comes back up to test supply here, we can look for a short entry. So those are zones which have taken liquidity from either direction, and then you look to short or long the retest of that zone. So again, that allows for it to be a stronger zone. And there's combinations. So, you know, if the zone broke structure or an opposing supply or demand zone or an SR level and hunted stops, then obviously that's going to make a stronger zone than just a single one of those factors. Number 4 was there a strong move away from the zone. So in the current example here, no, we had a decent move away from this zone. So in the case of this short, we did have a decent move away from that zone, but it hasn't broken demand. So again, for this particular short entry, we've taken liquidity. We haven't broken opposing demand here. We've broken structure on the lower time frame, so we do have a small downtrend here, but we haven't broken a higher time frame structure. So it's all these factors that you're looking at to determine whether you think a zone is strong or weak. But even then, like, while it seems very complicated, for me, I would just say, you know, if you're trading zones that are on a reasonable time frame, and you're not trying to trade, for example, in chop like this, when it does have a decent move away from the zone, the chances are you're going to get a bounce or a rejection, in this case on a retest. So while it seems complicated, I don't think you should worry about it massively. I think it's worth, you know, look at these questions and, you know, certainly determine that at least some of these factors are involved. But you know, don't be too worried about you must always trade strong zones. You know, if you're finding a lot of your trades are not working, then maybe look a bit more closely at this. Then finally, is the zone clean or clear? And stacked zones, triangle consolidations, etc., are much more likely to fail. So I'll give an example of that here, and that's, you know, this little area here. So while we have this daily at the bottom, this actually has held, but it's a decent example. It's got a daily sitting on top of it. But if you look down at the lower time frames, you'll see here, you know, there's a little bit of a trend line stops. So you can see those trend lines stop. So this stack zone, it's a triangle consolidation. So this zone for me is a more risky long because you might take a wick through it. And in this case, we did have a test at the top of it, and when this wicked down, it just managed to take out that low, so it did hold the zone. But this is just an example of something that I would consider a less reliable zone. And having said that, you know, Bitcoin, when it is in an uptrend, will do this quite a lot. And try and find another example. Oh, I think actually Ether was a very good example. Let me just put up the Ether chart. And from recently on the high time frame, I think I don't have any drawings on this. Yeah, so Ether actually has multiple examples of this, and it's one of the fractals that I've been looking at. Let's see again here. So we've got a few of the things that I've already commented on. We have, let's try and find the right zone. Okay, so we have a weekly demand here, which is holding up this whole consolidation. This weekly demand is strong, it's had a decent move away from it, but it hasn't broken supply. So it's sort of a mixed, it is a strong-ish one. Medium probability, I would call this one. However, when it's come back here, it has held. It's consolidated for a while and then pushed again. So this new demand hasn't managed to, only swing failed the high for a start. And again, didn't break supply over here. It's had a decent move away from it, so that is reasonably strong on that basis. However, it's left trend line stopped under here. It's not strong demand in the first place, so this is actually a monthly zone, which it has wicked. So strictly, I would draw it like that, but this is another example that if you were going to take longs off this monthly zone, that you would probably put your stop at least below that wick, and you would have been just about protected, or sort of below this low here because of that trend line. But strictly the monthly zone is there. So it's a weaker zone. It's had a good move away from it, but it hasn't managed to break the high. But when it's come back through it, it's taken these stops. So I don't love these consolidations where, like I say, when it's not clean. Like ideally you want a single candle, you know, it's like a candle like this is something I consider much more clean. So that weekly demand there. Again, so this is what I would say. So from this perspective, this is not a strong demand. It hasn't managed to break previous high other than a wick. It has had a strong move away from it, but when it comes back here, it does give you a reaction. So even though it's weak, again, it's got given you a tradable reaction. Whether you wanted to long here and hold for a new all-time high, that's up to you. It's possible it could have done that. I'm sure I can find examples elsewhere on the chart that it has off zones like these. But again, like Ether, we see this similar structure multiple times on the chart. So there's one over here. There is one over here where it made a similar structure, but it did push from it on the lower time frame. But yeah, this is just a nice example of when you've got a messy, choppy zone, there's stops inside it, and how it can wick. In this case now, nearly to the bottom again, but this could very easily have gone through. Ripple was another example. So again, just giving you the recent examples so you can see, you know, zones that I just don't particularly like. And Ripple, again, I've done a lot of analysis on this where I've said I thought this would happen. So Ripple is its main thing is it likes to make triangle consolidations. It's done this many times throughout the chart and generally on lower time frames than this, but it likes to make triangle consolidations, break up from them, and then go straight back through. So again, that's not the best line, but example here of multiple stops that you've left. This is a 2-week demand. Not sure if it's so. Again, this was a 2-week demand here. You can see it's set a bit out from the price action, so you can even see on the higher time frame that this is a dubious demand. There may have been a 3-week in there as well, actually. Yeah, there was a 3-week. So again, you can see here we confirmed a 3-week. It was a weak 3-week, but it still managed to hold the test and push up. So it did manage to get a push off there. Again, it's a weak zone, but still managed to. Then on the 2-week, we created a new 2-week. I think it even tapped off the top of that and tried to push after the first drop. But then ultimately, it's come back and taken all the stops from underneath the zone. So those are zones to be careful of. So when I say clean zones, I prefer zones like these two, you know, 2 clear 3 days. This would be something else to be aware of from a zone perspective. Again, you've got a 3-day there and you've got a 3-day just below it. So obviously if this comes down to here, yes, it might bounce, but also you've got stops underneath here. So there's a chance again that it could go to the 3-day below. But again, it doesn't stop you trading this 3-day. You can just enter at the top of here with your stop below. And if you get stopped out, you get stopped out. Then you could enter again here. You know, that's 2 trades. You might lose 1% on the first and 2% on the second, but one of them might make you money. But again, they are clean zones that you can trade. Okay, so yeah, as I've said, stack zones, triangle consolidations, choppy zones are more likely to fail. So that's just a consideration. The other consideration is where is the zone. So zones at the origin of an impulse are stronger. Zones at an SR or range flip level. And this is something I see quite frequently with the alerts on my charts. If supply is made at a level that a previous demand was broken, so if I've got an entry alert that went off that's failed, then quite often price will then reject when it comes back to test my original failed entry. Is the zone in a golden fib retracement area? So ideally, you know, if you've had a strong up move or a strong down move, you want to be, you know, looking for shorts at a premium on the strong down move. So after it's retraced of more than 50% of that down move, or similarly for the long, and 50% at least, and preferably 61 to 78% area. And then finally, is it a quick retest of the zone? And we prefer rounded retests. So let me again find some examples on this. Okay, so Ripple, for example. Fibs I can find a little bit harder, like some people seem to be better at this than me, and I just don't do it commonly enough because I'm never quite sure if I should fib from here, from that wick, or from back at the all-time low. I've seen people who use them more frequently than me tend to fib from the demand that's caused the breakout. So you can see here in this case, so basically this zone at the start here is going to be the strongest zone because it formed the up move, or any of the bigger zone here, this whole consolidation really. However, obviously price may not get back down there. So second to that, you're then looking at, do we have a zone somewhere in the golden fib area? And again, we've got, like with crypto, you've got a bit more of the challenge that on the log time frame and the linear time frame, you might have different outcomes, different answers to that question. But again, I just look at both. I tend to find the linear is more reliable. So again, the 70 fib here falls in that 3-day zone. That's the upper one. Have we broken? So the other considerations were, do we have an SR flip level? So here, was there a zone here that falls at the same support resistance level? And then finally, was there an area that I was looking to short? So for example, let me try and find a zone. This is possibly not the best example. But again, so I would have been looking for a short on this monthly supply. So let's say here, so I potentially would have alerted, in that monthly zone or at the bottom of the monthly zone with the alert, but I would have looked for a short here. So again, this coincides with this 3-day demand that's there. So there's a few different factors. And again, it's up to you, the probability and what you're willing to accept. If you're so desperate to get into Ripple, which personally I wouldn't be because at the moment we're swing failing all-time high, but if you're so desperate to get into Ripple, then you might take a more aggressive entry. But ideally you wait for at least below the 50% mark, preferably the 61, 70, 78, and even better at the base. The problem with waiting till the base of the impulse is then it does sort of invalidate the Elliott wave rules, which says if you have a wave, then it should hold at the top, or barring a wick of the previous wave. But that's probably another video. But again, here you can see clearly we've made a monthly demand at the start of this up move, a significant up move. When we came back down, tested it, we got reaction. And I think eventually actually it did swing fail this zone. But you are looking at the start of the impulse as being the most likely reaction point. Similarly here, it started an up move here, decent up move, then when it came back, that's when you got a much bigger move. And the same here, I can't remember, I think there might be like a higher time frame, but also possibly a weekly in there. Again, when it retraces this move, that's when you see this start to come up. And this is much more slow, and again, bear in mind, you're talking strong and weak zones. This is a strong zone, it had a really strong move off it, but when it came back to test it, it didn't manage to make a higher high. So on that basis, arguably, it could then take out that low, but in this case, it still made a higher low, but it took a long time to build support, demand, and consolidate before we got this final massive up move. So I covered all the things in that. So yeah, is the zone at the origin or source? That's what it's, I've made comments on that. Is the zone at an SR flip level? Yeah, a few comments on that in there. The golden fib retracement. Oh, and it did a quick retest, so that was the only other thing that I hadn't commented on. So let me try and find an example. I can see examples of slow retests on Ripple. Maybe this actually, no, there is quite a good example in here. So here, this made a monthly demand in there. Let me remove the other one so you can see. So in this case, we had a move up, we had a monthly demand at the bottom, then we made a new monthly demand and had a strong move up. But the next month, came back to test it. And this is actually uncommon. That had a really strong move away from here. So what you'll tend to find is normally this will happen if it's a weak monthly supply. But this had a strong move up away from it, but the next candle came back. So therefore I tend to find the zones are less reliable. Like what you really want to see are a few candles. So as here is another example, and this is a stronger demand anyway. In fact, I didn't quite test it, but you know, it's had a couple of candles moving away from it and then a couple of candles before it comes back for the test. So that's ideally what you want, just a bit of space before the test rather than this immediate test. But again, doesn't necessarily mean it's not going to work. What you'll tend to find, so here's another example in reverse actually, is if it's a weak supply or demand, then it's much more likely to fail if it has the rounded retest. So you can see here that we're still really within range. We did make a monthly supply here, closed below. It was a swing fail, at least of that monthly zone, and then the next month just pounded straight back through it. So it's a weak supply anyway. And again, even then, like normally I think you'd expect a reaction, but obviously Ripple and crypto in general can do some crazy things at times if you want. So this threw me off a little bit actually. Like I was expecting at least to hold a little bit and just figure out what it was doing. The bigger picture was up, but again, it's timing that massive breakout, which is the challenge. So yeah, that's some discussion on what are strong and weak zones. Okay, so on to the next section, entry strategies. So this is kind of why it's taken me so long, because there's so many options. And I've listed just a few of them here, and I haven't gone into detail, and I'm not going to teach in this video how to enter on all the other ones. But I just want you to know that you don't have to use low time frame supply and demand if you don't want to. So let's just start at the beginning anyway. So I've kind of listed these in what I would roughly consider as order of complexity. You know, and how much time it's going to take, you know, on an individual trade basis. But I mean, some of them will take longer from a back testing perspective. But yeah, so for starting, catching a knife. You don't wait for any confirmation at all, and you just trade the zone. I would tend to just use this if you're trading spot, or if you're trading very high time frames, you're an investor, rather than, obviously this isn't going to work if you're a scalper, or it's going to stop you out a lot if you're a scalper. And so I don't recommend this with high leverage either. But from an investment perspective, there is nothing wrong with doing this. And I actually did this on Ripple, so let's show you the example on that. So this had this 3-month demand here. I'm pretty sure that's what I was looking at initially. Oh, so I had actually, I had entries all the way down to here for a start on this 3 months. So I was actually looking at this whole area. But we had this 3-month demand in here, which obviously we've held for, you know, a year, better part of a year. Then inside that, there was this untested monthly. So there were a lot of people who were trading longs up here, and I said it was a joke at the time, but I had entries down in this zone. So where are we? So I've said many times, I think below the 40-cent mark. So I had entries from 40 cents, I think, all the way down to 25 in case that wicket came through and took out everything. So I did that on spot. I didn't really have a specific stop because I obviously also know that Ripple tends to bounce hard. But what you could do here is, you know, you could have just traded that monthly demand. You know, there's another monthly here, so like I say, you have to be aware. I didn't use my whole portfolio on this, so you have to be aware, you know, that it could have gone for further stops down here as I was. So I'd spread my entries for this whole section, and my, you know, mental stop would have been obviously if we closed underneath the all-time low. Is that no, it's not the all-time low, but underneath this wave up move. So obviously we had, you know, strong up moves off this zone. This is what's holding this whole consolidation up. So yeah, for me, if we'd started obviously closing down here, then I would have had a real problem with it. But Ripple obviously tends to bounce. It would hold this monthly range for a long time. So I was looking for that swing fail into monthly demand. So there is nothing wrong with, particularly if you expect wicks, and particularly on crypto, with having very distant entries on very high time frames. Like even on the weekly, I wouldn't necessarily recommend this. But for example here, you know, you could have put a short entry short entries through this zone. So you can either enter at the start of the zone, so you can put your entire entry at the open of the zone and your stop above the zone. And obviously that would have made only a 1-to-1 risk to reward or so if you'd taken profit at this absolute low, so that's not ideal in this case. But you can put entries through that zone, stop above the zone, and then you're in, and you don't have to wait for any confirmation whatsoever. So I would only suggest that for strong zones. In the case strong here, it had a decent move down from it. It had left stops here, so it stop hunted. If that zone had worked, then it would have had a stop hunt on the retest of the zone, so therefore is less likely to go for stops above the zone. So strong zone coming down, and again here, this is not the strongest zone going up, but a zone that obviously had held for a really long time, and again had the stop hunt going into the zone. So there's nothing wrong with doing that and not waiting for any confirmation. And these may not have given you any confirmation on the lower time frames. And in fact, in the case of Ripple, when it did come down into that monthly demand, I then did add, I wasn't overly certain of this, obviously everybody's very bullish, and I think around this point is when the court case was released, and it really actually didn't react very much, and maybe that was that up move, I can't recall. But again, you're looking, you've got your monthly demand there, we've had a move off it, I did take some profit up here, and then, it's made at least a daily demand, possibly a higher time frame demand in there. So I added some new entries here. Unfortunately, I totally fumbled it because I then closed all of it here because I waited too long and it bored me. So this is why I'm not a high time frame trader. But that is a way that you can enter on the high time frames and things that you are very confident of. I would generally limit that to, in crypto, things with a lot of history like this, that are likely to get a reaction. Obviously you're doing it on meme coins, in these, with meme coins which look more like this, and very possibly won't go back up again like Ripple, then obviously you're running a much higher risk if you just put random entries in this zone, even if it's a monthly zone. In this case, but again, it can be done. I'm showing it on Ripple, but here, for example, you had a 3-day demand. I'm only doing this quickly, so I'm obviously not looking at the detail of what's within the zones. It had a bounce just above that, but again, if that wick had come down into here, if you just had blind entries with the stop below, it's the last solid demand before this move up. Eventually, obviously, it came down and took it out, and that will happen. At times you're going to get stop hunted, but there is nothing wrong with doing that if that's your time commitment, etc. But like I say, I would stick with the high time frames if you're doing that, because you'll probably get wicked around and stop hunted if you start trying to do that on a too low time frame. But you don't have to wait for full-on confirmation if you are a high time frame or a swing trader. Similar here, you've got a 3-day supply, swing failed the high. There is nothing wrong with putting entries on this 3-day supply and you'll stop above here and just see what happens. And again, there's pros and cons of this, so please don't take that trade as gospel. Obviously, the swing failed the lows here, so there is a chance it's going to go out and take out this high now. But again, there's pros and cons of every trade. But that's obviously the easiest way to enter. Fibs. So again, this is after bounce on your chosen zone, or a rejection if you're looking at a supply. But again, you can just look at Fibs. So try and find an example of that. So maybe just use this monthly zone as an example. So again, this is a high time frame example, but you can use this on any time frame. I'll try and give you a low time frame example, but it's had a bounce on this monthly demand. Again, even without looking at the fact that's a daily demand in there, you could just say, right, we've had this decent bounce off the zone that I wanted. I'm going to look for a retracement entry on the 61 to 78 fib. You can put a bunch of orders through there. Your stop's here, so it's a little bit tighter stop than having your stop all the way below the monthly. So again, you get a bit of a tighter entry on the second test there. So I guess all these remaining options are the confirmation entries, after a test. And let's try and see if we can find something lower time frame to illustrate. Where's my chart gone? Where is that daily? Similarly here. So this is one that actually potentially would have failed, but again, like I say, it's just a different time frames. You do have to be, I think I put a comment on this as well saying the risk is that the first test may return for a stop hunt before reversing. So this is actually finally a nice example of that. So let's say here you've been on this daily demand, you see a bounce, and I'm ignoring the fact at the moment this hasn't broken structure because this is just supposed to be a basic fib entry. And again, you look for an entry in the golden fib zone, so you would have got the entry on that green candle. In this case, it would have come back to stop you out. So again, that is the risk you're going to run on this. Then when we did have this proper bounce off here, so up to that candle there, that's what I'm measuring here, then obviously it didn't come back for the 61 for a re-entry there. So there's, sometimes it's going to work and sometimes it's not going to work. Let me look. So then this bounce on the monthly here that we've seen. This chart's turning out to be quite good to give examples. But so again, like just fibbing up to the top of this zone. Again, you look for the entry on the retest of the golden fib zone. So those are different ways you can use the fibs for entries. Let me see if we can get a short version. And find something to use for a short. I mean, even here off this monthly, potentially this could be a bigger. Again, we've had the rejection of monthly supply up there, it's dropped down to here, comes back to test the 61 to 78 fib zone, your entry's there, your stop's above the wick, and then in this case you've got a decent move off it. So again, like it's something you need to back test what works for you. Some of these are going to work, some of them aren't going to work, but at least that gives you a second, you don't have to blindly enter on this monthly, but you're just watching the monthly. Is it giving you some sort of a fib? In this case it gave you a daily, and again you can look at any time frame on this as well. So let me see if there's anything even on the lower time frames again. Should have cut the history off this chart and it would have made it a little bit easier. So if we go down to the 15-minute time frame, that's actually, this one's going to have failed, isn't it? Because it did make a lower low. But again, this is back to a decent example of time frames that, the 15-minute when you're trading on a daily zone is okay actually, but if you're trading on a monthly zone, you don't really want to be looking at a 15-minute. So yeah, and then that's just going to give the same example that we had before, that it's going to take it out. What about this 15-minute over here? And again, this is why, another reason for this is why I'm choosing, why you need to choose your time frames, and why I say time frame is really the most important thing in this, because you'll find that, yeah, if you start going too low time frame, then things aren't going to work. So again here, like on the 15-minute, and also why I flip backwards and forwards between all the time frames. So that's why I would have all my zones drawn up here. There would have been a 4-hour and hourly supplies, etc., etc. So I'm really looking at what's happened on the way down. This very much had a blow off bottom. So if we fibbed, so to the top of that first bounce, that flicking around with the magnet, but here I actually need to be even lower time frame. Let me just go back to the 5th of July. Do this the easier way. Is it the easier way? I know it's not allowing me to go that low time frame, unfortunately. Let me try the 10-minute. No, unfortunately I can't go that far, can't go back further than the 15-minute, but try and give this to you as an example anyway. So I'm assuming, that, like I may be wrong with this, which is why I wanted to look at the lower time frame, but I'm assuming on this example that we've come and made the low and then that wick has happened, that it's bounced from the low to that wick rather than come down from there. But if that's the case, if it's dropped into that wick and bounced up to there, again, retrace to the golden fib zone here. If you'd waited a bit longer on this and used that high, then obviously it hasn't come back deep enough for your entry. So again, you would have missed the entry. But again, you need to not be scared about missing entries is the other sort of thing on this, I guess. That if you miss the entry, you miss the entry. What you're trying to do is get high probability entries, and you know, if you're not given them, then you're not given them. That doesn't mean, you know, you don't have to FOMO in, and you just accept that and move on to the next trade. You know, but what you're looking for is those tight entries in those zones, ideally strong zones, and then for the bigger moves that come off those. Yeah, that's probably about it on the Fibs. Possibly more detail than I should have gone into, but at least there's you know 2 or 3 examples there for you on how these things can work. Patterns is another option, and so I pasted just a picture of some pattern examples, and this is probably going to be a bit harder to find. I use this myself a lot less, but it's something you can use. I mean, trend lines are obviously kind of one of the more common ones. So let's see here, for example, if this gives any decent pattern as an example. And what you'll find is a head and shoulders, or inverse head and shoulders, is probably the most common one. This doesn't really give you anything, but again, what you're looking for is, are you going to get any, you know, a falling wedge, a little flag, you know, a trend line break. You know, if that was a trend line, maybe you could trade a trend line break here, break, retest, go. Any of those sorts of patterns on the lower time frames once your zone has been hit. And like I say, it's not something I use overly myself, but it is something that trying to find where that monthly hit again was. Oh, that was the monthly hit, and then that's the weekly. Not something I use overly myself, but you know, you should be aware of them because they are very easily tradable if you do see them. I think Ripple actually has more. What you'll find is it does it a lot more at the highs. It will do trend line breaks. So again, if we go back to some of this PA from last year, as I told you, you know, it commonly does this triangle breakout, breakthrough. But Ripple also commonly does trend breaks. So you can see here, I made a little trend line of stops there, runs through it. So you can trade an immediate break of a trend line with your stop above or above the highs, or you can trade the retest if it comes back in to a supply here, or again that would be combined with other entry criteria that I'm getting to. But yeah, so Ripple has a few examples of these sort of trend line breaks, you know, rising wedges. So arguably this rising wedge here that you can trade on the lower time frames inside these zones. And like I say, inverse head and shoulders is kind of the most common one. But yeah, that's basically coincides with the break of structure and supply and demand entry criteria that I'm going to talk about in a moment. Yeah, so that's examples of how to enter on patterns. And yeah, so I've also commented here, you could actually see a pattern on the higher time frame leading into your zone, or on the lower time frame inside the zone. So I actually haven't commented on that, but you might find a way to try and hunt for can I try and hunt for an actual specific example on this chart, because it might take too long, but let me think. I was thinking, for example, on this sort of bear flags and bull flags, but you know, the point is it's leading into the zone. So again, it makes it a little bit harder, but okay, here's an example maybe. It's not the best example, but so in this case, we've obviously got the bigger trend line break as well. So not only have we hit your zone, we've got the potentially a mini trend line break that I drew in there before, and then the bigger trend line break coupled with it. And you know, then arguably is this in some sort of a falling wedge type pattern as well. So again, it's combining all these things together to make your trades higher probability. But as I said before, you know, we can go back to the first one. You don't have to do any of this. Divergences, I won't be putting indicators on my chart to show you this, but I mean, a lot of people do use like hourly divergence, for example, at the lows. So, you know, they'll wait till the low's in, they'll put their hourly RSI. You can use, most people use RSI, but you can use OBV or the CVD, the cumulative volume divergence, etc. And then when you see a divergence in the indicator with the price, So generally what you'll find is the price is going down and the indicators going up would be a bullish divergence, and then you enter once you see that as well. But that's a whole sort of course in itself. And the problem with that is that strategy, and also why I don't want to go into detail, is it can provide you a confirmation, but it doesn't help you refine your entry. Whereas the fibs and the patterns can help you refine entries and tighten stops. Another choice would be moving averages. This needs a lot of back testing. It's not something I've used massively myself. I've kind of tossed it up a few times, but haven't loved it. But let's say, for example, on this 15-minute demand, 15-minute time frame here, scroll back again. Sometimes it's just slower than others. But you could put moving averages on, so let's say, the EMAs, and you could say, right, we've hit my daily demand zone here, it's on top of the monthly demand, and you're only going to trade when price either crosses the moving averages or when the moving averages cross each other in a positive manner. But like I say, this needs a reasonable amount of back testing. You need to pick what time frame you want to use. You need to say, which lengths of moving averages you want to use. So on, the EMAs, you can choose your lengths. I've got this EMA cross indicator is one I wrote / half plagiarized from somebody else because I'm not a coder, to have 4 different options. Mainly because I was testing an FX strategy at that stage when I wrote this. But yeah, you could say, right, you're going to enter when the blue and the green cross, so the 20 and the 50. So that cross here, that means you enter a little bit high, but again, gives you a slightly more refined entry or a slightly more confirmed entry than just blindly entering in the demand. So that's something to consider. But yeah, you will need to do a reasonable amount of back testing to see if that's going to work for you. So then these final 2 sort of combine. So the very basic version would be a simple break of structure entry. So you would choose a lower time frame. You find where the last swing high is if you're looking at a long, or the last swing low for the short. You wait until that's broken and then you enter on a retracement. So you could combine that with the Fibs strategy to improve the Fibs strategy. And as I said, essentially this is a head and shoulders pattern. It gives you an opportunity for a tighter stop as well. But again, the time frame on this is the bigger issue. So let's say this example, we're down in this daily demand. Is it going to move it when it's 5th of August, just in case the chart moves when so again, I would have all my zones drawn. This is becoming slightly annoying now. 5th of August, it's easier. So for me, I would be drawing, I'm not going to do them all now, but any 4 hours, etc. in here, I'm just going to draw this as an hourly. And what you're looking at here is the waves down. And maybe I need a video that does more detail on this. This was sort of a bit of a test, this video, so I guess I can potentially do other videos that have more detail. But what I'm really looking at are the waves of the price. So hourly is not great here, but let's say, these are the waves. When it breaks a low, that's a new wave. For me, it needs to break significantly. So here it didn't really break significantly. So maybe that's the bigger wave there. But basically, you're looking at, I'm assuming, I probably shouldn't assume that for the whole last section actually, but why did I have this to here, to there? So you're looking at, when the last, all your wave is down, and then where your last swing high is. So I'm going to have to remove that now so I can see what I'm doing. So, for example, this is a more conservative. So I'm looking at all the new supply, all the supply, and that's caused that wave down. So here we had an hourly supply up there. I had a big drop from it, consolidated a little, made a new hourly supply, dropped off it, retested that. At this point, it's unable to make a lower low, so that's pretty good. We also have an hourly supply in here. So again, I'm looking at the last down move. So while we have a little hourly supply in there, which obviously got broken, the last down move here for me is that. Take my magnet off. Is this. Then it tested that, then it was unable to make a new low. So I'm looking at this as the last swing high. and it happens to be an hourly supply as well. But this is the last swing high. So once that breaks here, you can then look for an entry on a retracement. And again, it's up to you. You could just, I would suggest at this point, you know, you're waiting for that retracement into the golden fib zone, which, like I say here, you just didn't get. So it's up to you. I mean, you could just enter immediately with your stop down here. And again, how long you wait determines, you know, whether you're going to get into the trade, how tight your entry is, how far away your stop is. But from an hourly perspective, you know, that's your swing high to break. Once it's broken that, then you can start looking for a new entry. And in this case, then you've got another hourly supply up here. So that's why timeframes are critical, because at this point, you know, maybe there's a 4 hour here as well. Let me just go back and have a look at a bit of a higher time frame on this. Yeah, so this is in fact is a 4 hour supply. So from a 4 hour perspective, that's the last down move. So really, when you break that high, and this is a bit choppy through here, but when you break that high, that's when you want to look for your re-entry. But again, very much dependent on whether you're a scalper. So in this case, if you traded this on the 4 hour chart, for example, it's broken this swing high here. You wait for a retracement. So in this case, the first bounce, again, was far above the 61 fib. But that would be the first bounce, so you could have tried to enter there, but again, you're guessing because there's no real confidence, there's nothing really to enter on. So really, what you probably need the fibs for this strategy, unless you're just going to enter immediately that candle closes oversupply. That is an option. But you can see in this case it wouldn't have worked out very well because you probably would have ended up entering near the local high. So really you do want to wait for some sort of a retracement. In this case, this is actually sort of a perfect example, really, and also for the supply and demand that I'm going to get to in a minute. But it's broken that 4 hour supply, decent move up there, comes back to the 61 fib, happens to coincide with the demand that broke supply, and then again, you get your decent up move from there. I'm not sure how far that worked, but you didn't get very far, just to take out that high. But the difficulty here, and then it came down a bit deeper. But again, overall, this trade would have worked, you know, rather well, you know, from that big move. Hindsight's wonderful, isn't it? But you can see how many entries you could have got for this anyway. So we had the original entry over to the left, which I won't go to, on the monthly demand. Then you made this daily demand, which you could have just entered as a daily demand. You could have entered on the 15-minute break of structure in here, higher risk. And as I said, you know, if you tried to enter on which strategy was it? The Fib retracement of the first move, that would have stopped you out. Actually, I think that was on the monthly to the left over there. But on this case, you know, it did give you a retracement on this time frame into the 61 area for an entry there, and I think maybe it didn't give you the entry on the 15-minute down there, it just gave you an entry on the higher time frames. So you can see how higher time frames are more reliable. You know, on the 15-minute, I think this entry didn't work using just the fib, but on the 4 hour, it worked very well. So if you're trading a monthly demand, you probably don't, oh, this is the monthly entry, excuse me. If you're trading a monthly demand, then obviously trading the 15-minute fib retracement isn't ideal, but trading a 4 hour fib retracement worked quite well. And then maybe it was the 15-minute actually that failed over here. I'm getting my examples mixed up anyway, but I hope you get the idea. So yeah, you're looking for that break of the nearest swing high, and then that's your entry. So it's a simple break of structure entry, but I just sort of added it, wait for a retracement, because a simple break of structure isn't, you know, that reliable. Either you're going to end up with an entry that's really far away, or if you go too low time frame, you're probably going to find that it's going to, if you don't wait for a proper retracement, then you're going to find it fails. Let me see if I can get this on the 10-minute. Probably not. That work or not? Not quite. Just short of getting the 10-minute chart on this. Yeah, I wanted to show some low time frames as well, but the 15 minutes is as low as I can get for this particular example. And yeah, like I say, so then these trades are basically, you know, they're going to be complex or complicated inverse head and shoulders or head and shoulders. So in this case, this is your head and shoulders. So that's the swing high that I wanted to see broken. That's your left shoulder. It's come back down, it's taken out the low, so that's your head. Then that's your right shoulder, and then that's your sorry, that's your neckline, and then this is your right shoulder, and that's your entry. So that's why I say these are sort of inverse head and shoulder charts, essentially entries, which is basically a break of structure. Don't need to do that. I lost the chart again. Yeah, so the critical thing here is to assess all the different waves down, and some charts are going to be easier than others, and Ripple's actually really not the best example to look at waves, but a lot of the time when I'm trading, I'm spending time looking at what waves, retracements, how deep are the retracements, how strong are the waves. Here we had a very strong wave up from there, so strong demand at the bottom of there, and when it comes back, it's too far off the other end of the chart, we had the test here, which then had another move from it. So that's a simple break of structure, and I've kind of gone a bit into the low time frame supply and demand from that, because basically it's the same. So while I was using swing highs and swing lows on that example, basically that's where your supply and or demand is. So for low time frame supply and demand, you're waiting for your price to hit your major zone. Change that to a high time frame zone, and then you're waiting for structure to develop in your preferred direction on the lower time frame. So you're waiting until an opposing supply is broken for the long entry as we were just looking at, or for demand on the short entry, and then you enter on the newly created demand. You could enter before supply is broken or demand is broken if there's a new zone to enter, and I think there is an example of Ripple that I can give you in a second, but perhaps if the supply, so if you're looking for entering long and supply is really far away and you're thinking this is a blow off bottom, if you see new demand formed, and I think Ether and BTC yesterday are probably good examples of this, if you see new demand formed, you can enter, knowing supply is very, very far away and you're probably not going to get much resistance. However, obviously it's risky because you're not waiting for the break of structure. It does allow you, this whole method does allow you to have a tighter stop. Again, you can use a stop below the wick, you can use a stop below the high time frame zone if you want to be more sensible, or you can use a stop below the much smaller low time frame supply or demand that you're trading. And I've said here the complexity is not so much in how you do this, and I can give you examples that are going to make sense. But obviously I'm talking in hindsight, so when you're doing it in real life, it becomes a lot harder. But the complexity is more to do with the selection of the time frame where you take profit and how you manage the trade. Because, and maybe Ripple's kind of a good example for this because I've covered so many time frames. But so let's go back to the hourly on this. So as I've said here, so we did get, I was looking over the other side on this, but so here, let's say just as a basic example, we have the hourly supply here, it's gone through it just slightly here, and then it's come back to test demand at the start of the up move. So it's a pretty simple, breaks the local supply, you trade, get back in on new demand. Now obviously I'm not drawing all the zones in here, there's a bunch of other hourly zones in here, so I combine this method with other methods to kind of choose which. The chances are the strong demand is the one at the start of the impulse, I've said that before, so in this case you would probably wait until here, but there is a chance you might get a bounce off there, and again that's up to you to create strategies for that. Do you want to enter a bunch of entries here with your stop below the low or below this low just to be a bit safer, or do you want to just try here with your stop below there, and if you get stopped out then you enter again and this is your second entry. There's different ways of doing this and trading this, but again what you're looking for from the confirmation perspective is what are your waves down, where's your last wave down, the last supply from your wave down. When that's broken you then buy the retest, and I think there was either that there or on the 15-minute. I think I feel like I'm flipping between two different zones, which I am, just as different examples, but so again, here from the 15-minute perspective, And this, obviously, this is a bit of a messy one, and again, it's good to give that messy example. We already had the hourly supply drawn in there, but again, you're looking at the waves coming down. So we've got this wave coming down, broken the low, tries again, breaks the low. So, and the waves, it doesn't matter so much the time frame. Obviously, you'll see much smaller waves within, but you're really trying to just determine the bigger waves, because you're looking at waves of price and you're looking at the momentum dying off. So again, you know, once you see the momentum dying off and that last wave, so you can wait again, this is clearly the last wave, even though I'm looking at the 15-minute chart. Right, so this is clearly your last down move. It comes up to test it, and then you're looking for the down momentum to die off, I guess. So, and again, you can look on any time frame, but on the medium time frames, you're going to see the clear pattern of what's going on. This lower time frames, you're just going to see, it's going to be a lot more choppy like this. But again, what you're looking for is just finding that confirmation entry. So when this breaks, in this case, it happens to be an hourly supply. But even then, you can use the 15-minute here. You can say that to your last supply, and it's broken that, and then you want to buy the retest once it's broken your last supply. And in this case, it's gone straight through and broken multiple supplies. But obviously, it's easy to say that with hindsight. At this point, it could still have rejected there and gone lower, but that's why you're waiting for the break first. So you wait for the break, and then you're looking for a retest of your entry. And in this case, it gave you a 15-minute up here, and you've got that hourly that we had down there, I think. I am flipping between two different charts, but anyway. You've got an hourly here from historically. Let me go to the hourly, see what I'm doing. Oh no, that was the hourly supply that we've broken through, excuse me. So in this case, you've got an hourly demand down here. Strong hourly demand, so it's strong because it's broken structure. So you can wait for it to retest here, and in this case it didn't. It might have done later, but it hasn't done at this point in time. It's made a 15-minute in here at the point that it broke structure. So again, remember I said, and there's the strength of supply and demand. It'd be easier if I'd chosen a current chart. In the strength of supply and demand, so your strong ones are at the start of the impulse, but then you also have strong ones where a supply has flipped to a demand. So we had a zone here that would have been an hourly supply, it's flipped to demand, and that's what's held the bounce. And let me go up to the higher time frame again and see if this does come back to test this hourly at any point. So no, in this case it hasn't. So that would have been your hourly demand, and it's never come back to test there. So again, some of these entries that you're not going to get, and at this point, we then made a 4-hour here, so you might kind of revise and say, right, if you still want to get into this trade, you set a new alert and you wait for that 4-hour to get tested, which also possibly never gets tested either. Oh no, at this point it does come back, so we do eventually test the 4-hour. So you'll find other time frames start developing new price action, but we did never come back to test this hourly down here. Yeah, so sorry, I fluctuated a bit between using that as an example and this as an example. It's harder to note on the different time frames, but I hope I've given you enough examples on this. I will let people watch the video and tell me if they think I'm being clear or not. But yeah, the main thing is the price waves. Let me see if this can give a short example. Okay, so I just paused the video so I could give a better idea of what's going on with Ripple by actually having the zones drawn properly, or broadly properly. I haven't done every single time frame, but just enough to give an illustration. Okay, so we've had a triangle, we've had a breakout. We're looking at the possibility of this swing failing here. So what I would be doing at this point is drawing all the zones below, as I've said, looking at those waves up. So we have this 2-weekly, 3-weekly zones down here that I've talked about already. We have a daily just above, and then nothing on that time frame. Then I'm looking. Then we've got an 8-hour here, and at this point in time, it looks like we've also got an 8-hour supply. So again, if you're very confident, you can just short in here on the 8-hour supply with your stop above the high. You know, obviously I know with hindsight that works, it's easy to say now. This is not a trade I would take at this point in time, because on the same time frame we've got an 8-hour demand that's just lower, slightly lower. So on this I would be looking at this kind of going, I want to see this retest first, because there's an 8-hour demand very, very close to current price. 12 hour wasn't, no. Okay, so, and the 4-hour, there's nothing new on that. There's a couple of new 4-hour zones that I put in down here. And again, just as examples, you know, with aggressive entries when you're going with the trend, 4-hour still pushes the up move towards this all-time high. There's nothing new on here on the 4-hour chart. The 2-hour chart, okay, so we've got a new 2-hour demand in here. So this is a bit of a choppy, messy zone, but really I want to be seeing the test. You know, you can still long at this point on the test of this 8-hour, maybe on the hourly inside it. And again, these are sort of, you know, aggressive entries that you can get if you're trying to scalp with the trend. You know, you can fib that last up move, and again, this 61 to 70 area is a possible long entry. But again, we're looking for shorts. You know, at this point you can still long, but you are be aware that you're longing right close to supply, so it becomes a much riskier trade. So we did have a 2-hour supply in here, but again, something you can short if you're very confident, but this is still looking slightly sort of bull flaggish, and it still hasn't tested this local demand. You know, it's still showing strength, so I probably wouldn't be shorting at this point in time. And then down on the hourly, so we had an hourly supply up the top, so we did get a test up there. And then we came down, and then we made this weak 8-hour supply. Like I say, weak, didn't close below the low and didn't test this demand either. And then we've got this hourly in here. So we did, you know, you did get a rejection off that hourly there. So from an hourly perspective, if you were willing to enter this, you know, very aggressively on an hourly, you could say, well, this is your last up move, broken, it breaks that low, and you enter on the retest on the hourly. So there are certainly those aggressive entries you can do, and while it's, you know, it's easy to say that with hindsight, because I know this drops, but I know this zone holds. But that would be your very aggressive entry. But at this point in time, you know, the higher probability is that this, you know, maybe we get a rejection if off here off the 8-hour, it comes down into 8-hour demand and then goes up again. So I wouldn't necessarily say take that entry, but again, if you're scalping this, you could take this and you could just take a profit here. You know, that would still be a perfectly reasonable trade. But that's why the timeframes are so important, because, you know, to say at this point in time that you want to short on this hourly, you know, in here, even before this happens, and hold it for a move, you know, to zero would be an incredibly high risk to reward, but the chances are you're going to get stopped out. And like I say, with hindsight, I know that's not the case, but I don't want to delude you into saying, oh, you should have shorted that hourly supply and you could have held that, you know, all the way down for the massive drop that we had a couple of days ago. So yeah, anyway, I won't go any lower than the hourly, but again, now, so we've had this new 8-hour supply put in, but it's weak, you know, and we also have an hourly demand in there, so I'd be kind of going, yeah, not really convinced about that. Not sure what that line's doing there. You know, it did also make a new hourly, with these 3 candles, made a new hourly supply in here. So again, it is giving you like trades on the lower time frame to get down just to this 8-hour demand up here. So there's no reason you can't take these shorts or longs in the other direction. But from a structural perspective, to look for, okay, we're now in this sort of major risk area for the possible bigger short, you're very early if you're starting to try and trade the hourly at this point in time. The 8-hour, you know, was a possibility. You could short, you know, as soon as this 8-hour was created, you could have shorted the, you know, the bottom of the 8-hour or a few entries in the 8-hour with your stop above the high or above the 8-hour. I believe if you were put it up your stop above the 8-hour, you would have got stopped out on this, but I guess we'll see in a minute. So anyway, let's just play this forward a little bit. So you can see we get a rejection there off the 8-hour and it comes back into this hourly demand, and it's made a new hourly supply there. So this is kind of all of what I'm doing when I'm looking for those entries, is just watching the candles as they develop and looking for something that can give me a reasonably high probability short or long. Obviously in this case short because we're at supply. So okay, so we've come down now, so obviously we've broken this hourly demand, you know this, okay, so the trade off the 8-hour supply would have worked at this point, at least to a TP1, if you were taking a profit in that 8-hour demand. Or at a minimum at this point, you could kind of go, okay, I've traded my 8-hour, you know, you move your stop to break even just to be sensible. So, you know, you created the 8-hour, you entered there, you put your stop up here, you know, that's 3R. If it goes all the way down there at this point in time, you know, your risk towards pretty dismal at 0.91. Maybe slightly better if you had your stop above the 8-hour there, so, you know, only 1R or so. But again, you might move your stop to break even or take a little bit of profit off and just see what happens. Again, I'm going back, you know, what's the higher time frame showing? There's nothing new there. There's potentially a new 8-hour in here. I'm not sure if this is going to confirm or not. At this point in time, there's potentially a new 8-hour supply. It's a weak 8-hour supply because it hasn't broken demand, but it has a fairly decent move away from it. And then there's another new hourly supply in there. So I know I can see here, you know, straight away, again, what I'm assessing is, okay, there's a risk here that we're going to stop hunt this trend line. I remember thinking that at the time, you know, that there's a chance now we're going to stop hunt this trend line. So another thing I'd be looking at this point, one of my other strategies, is the 113 fib that people have seen me use. So I'd be drawing, you know, a fib on this extension fib and saying, you know, I'd be looking for possible swing fail, taking out these stops into that area, which I didn't get in this case. But again, that's something I could potentially be looking for because that's a failed wave. And again, we're still at resistance. We still might get this 8-hour demand play out to make a new high because we're still in an upward structure on the 8-hour chart. We're starting to make 8-hour supply, so we're starting to potentially see weakness, but there's nothing confirmed yet. So let's play a bit more. I don't know if this 8-hour is going to confirm as supply. Let me see. I don't know if it's done yet. Okay, so we're in this hourly demand inside the 8-hour. You know, we've made a little 3 hits to the low pattern, and we've made a new hourly demand. So again, from a long perspective, if you're trading this 8-hour demand, there's a possible long off the top of that new hourly demand in there. So if you get a test of that hourly there, you could potentially take a long here with your stop below the low, stop below the 8-hour if you want to be really safe about it, and, you know, target this to continue up. Obviously, I would say this is a risky trade because we're right at resistance, so I would never be trading an immediate demand right at resistance. But it doesn't mean it's not going to give you a scalp. Like for me at this point in time, I'd be waiting at least, you know, as I've said before, for the 61 fib so somewhere down here. Let me check. I've actually, again, this is a triangle. Ones they're harder to judge the what point to put your fib from. So I put it from the bottom of that wick, or you can put it from all the way down at the bottom of the triangle. So triangles are particularly hard to place fibs, I find. But yeah, either below that low or below here. But you're looking, you know, somewhere down here for your long entry. And then, you know, there's a weekly below. So this is kind of where I'd be looking for longs rather than trying to long right up here. For me, that's not high probability. But if you're a scalper, no reason you can't try to look for these entries up here. So, and also we know that there's a chance it's going to take out the stop, so there's a reasonable entry. I'm trying to figure out what that line is. Oh, it's the things I've drawn for later, and that's it. Okay, so then play a bit more of this forward. So it didn't come back to test that hourly demand, or as yet anyway, and it's come again off the bottom of that 8-hour supply, and the 8-hour has probably been confirmed by now. So this new 8-hour supply has been confirmed, and we're getting a rejection off there. At this point, you know, we've still got that hourly demand at the base here, and we've made a new hourly demand in between. So again, I'm drawing that. So in this case, it's taken out that immediate 8-hour demand, but we have got an hour, sorry, hourly, it's taken out this hourly demand, but we've got this hourly demand below. This is why I say, you don't trade the mid-wave ones, you trade the ones, at the start of the impulse. So this would be why here would be your long entry if you were choosing to take a long, not higher there. However, if it's very aggressive price action, then maybe it would bounce on the higher one. Okay, so we've now got a decent move off that hourly demand there. And I think at this point we might have created a 12-hour supply. So it's a bit difficult sometimes when you're using the rewind tool, because it depends when the candles close as to when you switch between time frames. So this is actually closed just as later. We're gonna make that 12-hour supply. But anyway, so let me see if there's anything new. So there's nothing new on the 4-hour. So we've come off this hourly here, and now we've created a new 2-hour here. So again, and it's looking like we're going to get through this hourly supply. So again, we got that rejection off the hourly supply there, but it only came back down into demand and has now come up again. It's made a new hourly demand here, and it's tapped off that, and now it's moving up. So again, this 8-hour is sort of playing out as we'd expect, given we're in this bullish uptrend on this. And it's only like when we're going to get to it, that you see this 8-hour not break the high, that you then realize that it's weaker. But at this point in time, to be shorting here, assuming we're going to break this, is not the way to go. Okay, so let's play a little bit more on of this, because obviously I think we're going to go up a bit higher when we came down first. So we're back down in that 2-hourly demand now, and it's broken through it. Okay, so now it's broken, and now we've gone back deeper into this 8-hour demand. So you might start to go at this point, okay, now we're seeing a little bit more of a sign of weakness on this, but we still haven't broken 8-hour demand, nor have we broken even this hourly. And you can come back for second and third retests. So then now do we have that? We still don't know if we have the 12-hour in there as yet, but we had this 8-hour supply, and we had this other 8-hour supply. So again, now we're seeing, that's why I talk about the battle between buyers and sellers. We're seeing, the 8-hour buyers here, and people who are really just buying the top because they're coming up here, but this whole 8 hours of buying on this red candle here, are now fighting with progressively more and more sellers. We've got the 8-hour supply that's rejected, and we've got another 8-hour supply that's rejected. And these might start, at least for me, would start to make me, if I was trying to long still in here, would start to make me significantly more wary of taking longs. Okay, yes, you might think, oh, it's still going to take out this trend line, and it's made some more stops up there now. But you can see from a time frame perspective, we've now got a lot of consolidation up here. So when you're saying, again, the supply and demand thing, there's these 8-hour supply, this is a whole long period now, 2 sets of 8-hour supplies of people who are still buying in here. There's other people selling, yes, there are people selling to them, but there are still people buying in here who are basically buying the top, and we're going to be starting to get a bit panicked now the price is dropping a bit more. Okay, so let me just check if there's anything on the 4-hour. So this is exactly what I'm doing. You can see that's now going lower there. No 2-hour, so there is now an hourly supply in here. So again, possible short entry on this hourly supply if you want to. Not a high probability hourly. It's got this got these 2 8 hours, that's great, but we're still in this 8-hour demand, and we still have these trend lines stopped, so this would be a very risky short entry. And let's see if it works. I don't remember, I don't know the detail of this chart, so I'm just giving it commentary as it goes. And they made a new hourly supply in there, but still in this 8-hour demand, and now back, still holding that immediate 2-hour, but coming back properly to the start of this last up move now. So we're through that first hourly supply there, not surprisingly. Maybe rejected this 12-hour now, if the 12-hour actually exists at this point in time. Yeah, okay, so finally we've got the 12-hour confirmed. And you can see we're going to get a bigger drop off it later. We should probably draw that. So this is when the charts become quite messy, but this is the 12-hourly supply there, up to this high, and I think that does get taken out at some point. But at this point, you know, we do have a 12-hourly supply. So again, you can see on the 12-hourly chart, you know, it closed below. You could have taken a short here. And yeah, it has come back down lower and has finally taken out this 8-hour demand. But again, it's a completely different view on this time frame. 8-hour, 4-hour. Can't see exactly what's happened here because obviously flipping through the time frames makes it a bit more difficult, but we'll stick with the hourly. So it looks at this point in time like we have this 12-hour supply, we've got an hourly inside it, we've still got the risk of those trend line stops above. Gone through that hourly and then rejected, and then that's where we see the bigger drop. So it's taken stops of this hourly, so again that's the risk of using the lower time frames. It's taken stops, but it's come up, there's probably a 30-minute or a 15-minute at the top of here, take that out, and then the 12-hour has played out. And when I say the 12 hours played out, you know, I mean all the 12-hour has to actually do is take out this low. So it's made a 12-hour supply and then it's taken out the low on the drop there. And then at this point, it's now taken out 8-hour demand. But it's still only on a wick. So let's look at the 8-hour chart. And again, why it's don't be so set on using like just supply and demand. It's why you need to look at waves as well. So the 8-hour demand ends there, but you can see there's wicks just below, and obviously we have these 4-hour demands right below it. So this is not a clean area, and again, why I talk of clean. This is not a clean area. We did get a bounce off that 8-hour there, but they're not really clean waves up. So now it's just come back down into the 4-hour. However, now you can start thinking, okay, maybe this is a bit more bearish. You know, it's managed to break the 8-hour demand. It's managed to break this 4-hour demand. So again, you can start looking for short entries. But on the high time frame, so again, we've got that break of structure that I've talked about. We've broken the most recent low. And then you're looking for the retest for your entry. So if you had the fib entry as one of the examples I've given, and just see how these play out. Like I say, I haven't done this in advance, so I don't know. So if this is your fib retest, you could enter purely on the fibs just in this area here, a little bit higher, just from the 61 to the 78, stop above the high. So that is a viable trade. Now you've broken a 4-hour demand, and we also have 12-hour and 8-hour supply in place. So if we look at the 12-hour at this point, you can see you've already had that rejection off the 12-hour. So you're running a little bit of a risk by trying to trade it again on the test now it's broken demand. We still have the 8-hour, which really is bounding this top of the consolidation and some of these stops. So again, like I say, I think I know that it does go through the 12 hours, so I'm slightly biased on this. I don't know what the lower time frames are doing, but I've got fairly familiar with the higher time frame. But again, like this has played out, we've come back into demand. There's a fair chance if it goes for a test, it's going to take out at least this wick of the drop candle, if not just the 12-hour itself. So you can enter here with your stop above the high, but then you're obviously running the risk it goes a little bit higher into supply. Let me just check there's nothing on the daily now. So no, nothing's still on the daily. We've got the 12-hour that I already talked about. I would also mark out the 8-hour level here. Might get a rejection off there. There's also potentially going to be a 4-hour depending on the close of the candle here. So I'm just continuing to mark out all the levels. I'm going to delete this because we've gone through it. So yeah, we've broken this last up move, starting from the bottom of that candle, but it is still on a swing failure as well, and it's on a swing failure right into demand. So again, we've taken, if we're looking at it from a liquidity perspective, we've taken stops below both those two lows into a demand. Again, it's another possible long entry. But again, there's a chance we're going to take out some of the stops off the highs, given we've taken out stops off the lows. Go back down to my hourly. And did I just lose a... I know I've just lost a wick, that's why. Okay, so this is obviously going to go down a little bit lower. There's no new hourly supply or anything in there, so okay, maybe that's where we get the rest of the drop. There's no hourly supply in there. There's probably 30-minute or something like that, but again, I don't want to go down so low on the time frames. So from a long entry perspective, so it's not giving you anything here on the hourly, it's just taken off, but let's just have a look to give some long examples if possible. But again, if you're looking at this 4 hour as a possible re-entry for longs zone, you've got a new 30-minute demand there. I'm going to go to the 30-minute for this. You've got a 30-minute supply here, so again, just bouncing around in this area. And there's a little 15-minute supply at the top here. So I draw all these zones, I draw all the zones in. You know, what you can do and what a lot of people do is only draw them if they think they're strong. So you can maybe consider like only drawing the zones that you think are strong, so you ignore the ones that are weaker. So for example, something like this is weaker, well, weaker on the retest after it's done this move and it's come back through it. So you may not want to draw that in, or you may want to delete it once it's already had the test and moved off, because when it comes back here, there's a chance it's going to go through it. Yeah, so anyway, and yeah, so the 15-minute doesn't give you much more, but again, so this is your bounce on the 4 hour demand, something again that you could fib. You know, is it going to give you a test? So on this time frame, it didn't give you a test back into the 61. Let me just have a look at the 10-minute quickly. Yeah, so it hasn't really given you much here. It's just consolidated above this level that it's taken out. But again, another, as I've said before, you know, you're looking at SR flip levels and zones around there. In this case, you know, maybe there's something on the 5 or 3 minute, but there's nothing for me to long on this as yet. Like I would potentially look for a long if it came back to this 61 level after the first bounce, but in this case it didn't. And now it's moved up too high. So again, with the bearish side of things, you know, do you want to long again on a test of this? For me, probably not. But anyway, let's go back up to at least a 30-minute. So we could get a rejection potentially off here and back into that 30-minute for a long. So okay, so we've now taken out the 30-minute supply. So I would delete it. And then that makes a long here slightly more viable because it's managed to take out supply if it comes back for a test. Okay, so in this case it's not come back for a test, and it's already gone and taken out that high there. It's taken out stops here, it's taken out stops over that high. So again, we delete this hourly supply. We're in my possible entry area. So again, like if this is just a fib trade that you want to take, and with basic supply and demand structure, you're saying, okay, we've broken the 8 hour demand, we've got 12 and 8 hour supply. I want to short in here. Nothing wrong with doing that. So let me just get back to the 12 hour and see if there's anything new. So at this point, I would also be slightly wary, and you can clearly see it here, you know, if this, it's looking very busy now on the lower time frames, but is this candle going to close over there and flip this 12 hour supply back to demand? So if this is going to be a swing failure, then you need to see it fail. As obviously it's gone over this next orange line as well. So you really don't want a close over this candle on the 12 hour, because then it might flip it back to demand. 8 hour, there's nothing new there. At the moment we've still just taken out that high on those lower time frames. Has created a new hourly demand in there as well. But again, it's a mid-wave hourly demand. So I would look at this from a long perspective, you know, and I'm very wary of longs now because I know we've broken this 8 hour demand, but we do have a swing failure. So, you know, possible long entry on that hourly, I don't love it. I would rather go with a deeper entry on this 30-minute if it's given. So again, it's in a decent fib retracement area. It's broken the supply here, but only on a wick. But again, possible medium probability trade if it comes back there. You know, we are still in the direction of the bigger trend. We do have multiple tests on this supply now, so we can still potentially assume they're going higher, or at least going to take out more of these trend line stops. If it does that before this, which I think it's going to, then again it makes this less likely, less reliable. But again, you're just looking at each zone as and when they're broken. So okay, so we've now taken out stops there, we've taken out the whole 12 hour. I'm going to remove this fib here. Yeah, so we were looking at that entry, so that was our short entry here with our stop above the high. So we're slightly nervous now because it's gone through a few of these zones. It's taken out the 12 hour, it's also taken out this 8 hour supply. So again, I'll delete that. So it's now pushing a bit higher, and you're sort of panicking a bit because, well, you're not panicking because you've managed your risk, but you're panicking a bit because you've entered here on a short and it's pushing a bit higher than you wanted it to. And again, still in this sort of bullish up move, just with the swing fail of that 8 hour demand there. And then, like I say, you really don't want it to close with that 12 hour above here. So then we have a new hourly demand here. So again, if you're still confident of your short, I'm just going to delete some of these zones just because it's messy, but if you're still confident of your short and you want to find an entry, then again, you're looking, this is your most recent up move on the hourly. You're looking for this zone to break and then to short or retest there. So again, let's see if we get anything like that. Okay, so we've got the break there, and then it's again just a swing fail. It's not a significant break, pushing higher. And again, it's just consolidating through here. So this wouldn't be enough of a break for me to look for a short entry. Maybe if there was a 15-minute supply on there. We've now pushed through the second 8 hours, so we've now taken out all of the supply in there. I'm going to remove this fib because you know that was that zone looking for the shorts here. But again, so while I said that was a potential blind entry, that's where you're looking for shorts with your stop above here, you can also go, okay, we're now back in the zone, we're looking for shorts, and that's why you're looking for what supply and demand's breaking on the lower time frames. Let's see if we've got that 12 hour confirmed yet. So it did confirm the 12 hour, it did close above there, not significantly above, and didn't break the high, giving away some of the price action now, but got to look at all these time frames. So at this point we're still going up. Let me go with the 30-minute because obviously we're going to see a giant green candle, giant red candle shortly. But you can see we're still holding this original hourly supply from the start of this drop. So this will, obviously this is interesting. But again, with hindsight, multiple tests on this, I would have been wary. And wary this was still going to take out the highs here. But obviously this rejected now, so we've taken out that hourly demand. So now I would then be going, okay, this is the 30-minute. I don't know if this is an hourly supply, but I'd be going, okay, there's now a 30-minute supply there. We've had a decent drop down here. You can see we've got our long entry, if you wanted it. Again, still trading both directions. This is actually now an hourly supply. Come back down into here, so you could have taken a long entry there. But you can see how, so scalping on these lower time frames, and I'm trying to talk you through this because it's all the things you see and why it's so hard for me to give a specific strategy, because every chart's going to look different and all the things it has on it. And if you're a scalper, all these things are important. If you're a swing trader or a high time frame trader or an investor, these are the things that are important. Just trade this, short this fib, long this demand. But if you're a scalper, obviously it's much more important. And I know obviously most of my group are the lower time frame traders. But if you at least trade the zones that are strong, at least, if you're scalping, you can move your stop to break even, or you can just take profit quickly. And that at least keeps you safe. Maybe you'll lose bits in fees and things like that. But, something like this, okay, there's a lot of things going on up here, but it's just hit your 30-minute demand following your swing failure of your 4 hour. Nothing wrong with taking a long on there and still being long biased, with the wariness that you've broken your 8 hour demand. So anyway, let me just check the daily. So again, I'm just constantly flipping through all these time frames. The 12 hour, so we did flip that 12 hour to demand, so that again would make me slightly more wary. It's not a good demand, it's set from the price, and obviously now it's come out, so I certainly wouldn't have longed off the top of there knowing it's a weak demand, but I need to know it's there. 8 hour, 4 hour, nothing, 2 hour, nothing, 1 hour, we've got this new supply. So again, if I'm more confident of my shorts, that's a re-entry on that hourly if we get a test up there. And again, is it decent fib zone? It's towards the 78. Maybe we won't get that high. If we're more bearish, we've got a 15-minute just below. But again, you know, you could just short this 15-minute here. Conscious it's not gone to the top one, but this is all the different factors, and you've got to make decisions of what trades you're going to take. I'm just running on the 15-minute chart now and moving it forward a little bit. Might be just a bit too slow here. So we had a good move off that 30-minute demand below. We're now suddenly see a bit of weakness. It's made a bit of 15-minute supply, another 15-minute supply. I don't really want to be this low time frame because otherwise this is going to take forever. And okay, now on the hourly we're seeing another drop. I guess this is going to create an hourly supply in there. Still, for me, you know, it's not in, you know, we've had this down move. The down move hasn't broken the low, so this is not strong supply. Doesn't mean it won't work, but it's not strong. But at least you want to wait for a retracement up into that area, or you wait for it to become strong. And in order for it to become strong, it needs to break this low. And then that supply, new supply, is strong. So again, move forward on the chart, see what we get. Got a test there on that hourly. Hourly supply in there. It's come a bit up into, it's just chopping around in here. So we have got a rejection of this hourly supply. Again, it's not a strong supply. It hasn't broken this low. It's already chopped around massively inside it. So, but again, could have given you an entry if you wanted to be aggressive, but the preferred entry would still be at the top there. I can see I've got a 2-day here, so let me just see. Obviously this 2-day is going to confirm at some point. Not there. So again, just running through these zones. Okay, so now we can see that the hourly has broken. I'm going to take that 2-day out, it's just confusing things. I was just drawing before I rewound the chart. So now you can see we've broken off the hourly. This is a weak hourly supply, so again, didn't come and take out the low. And thus has gone back through it. And now we're back up on this 15-minute supply. Remember, this was at the 61.70 fib level, so again, nothing wrong with re-entering a short re-entry there. And still in this original circle of where we originally wanted that short entry. We made a new hourly demand here. All of this now is becoming in range, so a lot of these supply and demands, the local ones, are just weak because we're in this bigger range. And again, that's why you should always be conscious of what the larger range is that you're in. But there's a new hourly demand, but from a scalping perspective, you know, be aware of that hourly demand, because, you know, if you did choose to short on this 15-minute supply, maybe that's where you'd take profit. You can see now we've wicked up a little bit higher in that 15, okay, and now we've come up to this hourly where we really wanted the entry if we were patient. So again, yeah, see the rejections off the 15, we've got a nice swing fail there, but now we need this to break this hourly demand. But again, just see how things are bouncing between supply and demand. So we had a 15-minute supply, it rejected, came a couple of wicks above this hourly, tried again, then came down, then it found better support on this hourly, and then managed a bigger move up to this hourly supply. But again, just bouncing between hourly supply and demand. But back to the higher time frames, you know, are we getting anything new here? Excuse me. So on the 8-hour, we're still messing around, you know, we've kind of wicked through these 8-hour supplies, but we're still messing around in that area. The 12-hour, we've still got that sort of dubious demand where it closed above. Nothing on the daily, I don't think anything on the 2-day as yet. 4-hour, nothing, wait, no, 4-hour, no, nothing on the 4-hour. It did kind of make a mini 4-hour demand there, but it, yeah, it did get a bounce off it. No, it came down actually through it, so 4-hour local 4-hour demand didn't work there. You can see silver's going off while I'm doing this video. Anyway, let's just skim through a few more time frames. It's taking a bit longer than I thought. So obviously now we're breaking down this hourly demand. 2-hourly, in fact, and is in fact a 2-hour here that I didn't have drawn in. So, but again, this is the 30-minute, the retest, and then it's made this 2-hour demand at the start of the up move. I should probably also comment, you know, again, another entry here. If this bounced here, goes up to this wick there, and again, you can long on a retest in the 61 to 70 fib area This now obviously has 2-hour supply. So, you know, at this point, you know, and Ripple did obviously take a significantly long time up here compared to like what a lot of other things can do, and that's why I'm starting to move a little bit faster through it now. Because it really just then started ranging sideways and making another Ripple style triangle before breaking down there. Oh, and a lot there. So let me just look at again the higher time frames on this. I think that by this point it might have created the 2-day. Yeah, okay, so at this point in time, let me just delete some of the lower time frame things now. So they've gone a bit through the 2-day already, so I'm not sure whether it kind of went down before making the 2-day or after. But there, you know, that now we're saying, okay, we've got a 2-day supply that's been created under this major resistance. So again, are we looking for at least a bigger drop down into the daily? So it looks like we got the 2-day confirmed, but the drop happened before the 2-day confirmed. So again, on the daily, we've got a little daily supply in here. So we've had this drop, which has then created a 2-day supply. So again, looking for possible shorts on a retest up here. Again, we're still pretty conscious that we've got, you know, a new set of trend line stops on this. But there's a possible short here. So you've already got potentially taken shorts in this area from that. I think I deleted my circle. But from the original retest of this, so you've had shorts up the top. You know, you were trying to take longs in here, you know, and again, so from a short perspective, one of the other strategies I talked about, you know, we did have a triangle here. We did have a trend line break. So again, could have entered as soon as you saw that trend line break. But again, now we've had that break. As I said before, I don't like zones that aren't particularly clean. So we do have a 2-day supply in here, but we do have, you can see there's all this chop through here and there's a daily. And there's a possibility of taking stops over here. So I wouldn't be looking, if I was looking for a short here, now this is starting to drop, so that's decent. It's got a daily demand down here that you need to be aware of, so potentially looking for longs on that side. So now we've taken out this 4-hour demand. But you know, what shorts would be potentially looking for in here? I don't love this 2-day supply. There is actually also an 8-hour in there now. So again, I'm not showing, now I'm trying to do this a bit quicker and not showing all the time frames, but again, at this point in time, we did create an 8-hour supply. So again, that supported your short entries and allowed you potentially to add to that original short entry following that drop if you take an aggressive shorts. So yeah, I don't love this triangle. You know, there's a chance obviously it's going to take out some trend line stops. We're still in a bullish uptrend. This is still potentially a bigger retracement of this move. Remind myself where the fib was from this. Again, down in that daily demand, or possibly, you know, if we were aggressive on the fibs, maybe it's hit it now. So again, you can still short, but the bigger picture is still an uptrend. You know, it gave you loads of shorts through here, but it never broke this demand, which was bounding the uptrend. So again, potential for longs if we come down into here. Potential for shorts up here with the risk of the trend line, could go a bit higher. Again, can we just fib that last down move? If this is the bottom, 61 is at that 2-day level. So I potentially look for shorts on a test of that 2-day level whilst being conscious. You know, you don't want to, necessarily short based on this daily with a ridiculously tight stop because of the chance that it's going to go and take out some of these stops. 4-hour, 2-hour, and we've also got a 2-hour supply in there. Not a zone I'd want to short personally. You know, this is a 2-hour, it is at a previous SR level, previous demand level. So remember, we longed that 30-minute that was in here. We look for longs on that. So this is at a previous zone, so it is a viable short in there. But personally, I would be waiting probably for taking some of these stops out. And if I get it, I get it. If I don't, I don't. I can't remember if this is when the big drop happens or whether we've got another wave up first. Okay, so again here, back up to that 2-hour supply. We've made a 2-hourly demand in there. Again, this is not something I particularly trade. We come back down to this 2-hour demand here, but I would want this lower before looking for longs probably at this stage, because we're starting to look at reasonable amount of zones having been broken. But there is an aggressive long on here. It made a 2-hour demand. It's just made it through the 2-hour supply, so we do just have a little local break of structure, but there really isn't much further. I mean, if it comes to here, then that's a decent risk to reward, but that's possible long entry. I'm going a little bit faster through this now, so we'd have to consider a lot more things if I was actually trading this actively. But again, you're doing the fib of the zone, you've broken a bit of supply, it's had a decent up move from there. If it comes back to test this zone, this is a floating zone, I don't love these either, like when you've got a big wick and then it's made a zone that's that much higher than the wick, because I tend to think we can come back down deeper. But yeah, the possible long entry here if this tests before that, so I wouldn't take this if this goes up first. But again, let's just see what happens. So testing that first hourly, so it's still strong. Now it's gone and properly taken out that hourly supply, so there's, it's an entry I wouldn't have got. Okay, so now we're up in this 2-hour supply, and you can see here that it's taken out the stops above this level. So again, that's the risk that I was talking about on that daily daily supply that was there. But again, we're up in a zone that you could look for the higher time frame shorts. You could trade very tightly here. You're looking for a swing fail over this level. You could potentially enter immediately here with your stop just above there if you want a very, very tight entry based on that swing failure. You're in a larger zone that you're interested in. The zone's up here, but most of them have already been tested. Still, again, a little bit of a risk that you've taken stops below this low, but could take more from here. So, I don't know what I drew that line for. New hourly demand here. So again, if you want the safer entry, then you're looking for, and there is another 2-hour in there as well, isn't there? So we've got another 2-hour here. But if you want the safer entry at this point, you're looking for this hourly to break and then to potentially shorter retest if it's given. So you're looking for that break, retest, and then looking for that drop. And then you're still potentially looking for longs here. But now the risk on the longs now, as I said, is that we're coming off a 2-day supply. Then I would not be wanting to trade an hourly demand coming off a 2-day supply, which isn't in a decent high time frame demand to the left. So now I'd be potentially looking for that bigger move down. Let's see if I don't know if it's ready yet. Consolidates up here for a while. Going a little bit higher. Okay, so we didn't get that immediate swing failure off there, so if you'd taken the aggressive entry, you wouldn't have got it. And again, that's why I keep saying, it's the confirmation. So here, yep, you could try and take a swing failure here, but it didn't break any demand, and there was nothing to give you a re-entry. Now we've gone higher, we're taking stops off here. This did stop hunt a couple of previous, so this may be actually a higher probability possible short in here, but again, you're looking at all the new demand that's been created, all these new waves going up. So we've got an hourly there, an hourly here. Momentum is dying a little bit, but you want to see the trend change. You want to see demand break, new supply form, and get rejected on this time frame, but knowing you're still in the 2-day. I think that at some point we're making a 3-day here as well, but maybe not quite yet. Okay, let's see, anyway, play it forward again a bit more. Okay, so now we've got the break of demand, finally. So now, still back into another demand, and these points in time is when I can get thoroughly indecisive as well, and why it can be then subsequently very difficult trading lower time frames, but because you've got so much information. And I think some of the old TA books say stick with 3 time frames. So like here I'm kind of predominantly using the hourly 8-hour and then keeping the high time frames in there as well. But yeah, if I was actually trading this, I'd probably also be going on to the 15-minute and the 5-minute, etc. And then it can become very lots and lots of information. But okay, now we've got a bit of a break of structure, so it's not a confirmed. So again, remember, this whole thing's an uptrend. This is an up move. So, this can still be a retracement before more up, to here, or to here if it's being aggressive. It's only when you see, lost my supply, it's only when you see break of demand, retest of supply, this hold, it doesn't have to hold at this point in time, another lower low, and that's when you're starting to see, you know, the downtrend coming into play. And you don't always get that. So I think, you know, and I think some of the literature I've read, you know, we'll call this the risk entry. And then once you get the lower low, and then this is the confirmation entry. But quite often you just don't get that. Quite often it will just move. So again, you have to use your judgment as to, you know, if you are comfortable taking a short on this without the second confirmation, whether you would rather miss it. And again, up to your trading plan. You know, are you the kind of person who's scalping this like the way I'm describing it, you know, who's scalping every single one of these zones? Or are you the kind of person that's just going to short off the 2-day supply with their stop up above here and then go to the beach? So yeah, anyway, let's just roll this. I probably should have looked at more time frames on here, but okay, so now we're getting a bit of wicking around. We come back down into this next demand. But it's still not really giving me my test of my hourly supply up here for that tighter final entry. Well, not necessarily final entry, but most recent entry. It's consolidating a bit more than I'd like. So there we've now got a wick into the zone. But again, like back to the lower time frames, like have we? Yeah. So now we've got this 2-day supply, but we've now created an 8-hour demand. So again, we've got that challenge. Would I take this now? No, probably not. I would see that 8-hour demand created and think, yeah, no, it's not really a viable. You know, we've got a 2-day supply, but we've got this 8-hour demand. Let's delete the 2 days so you can actually see you've got this 8-hour demand as a big zone. It's not a very nice zone, but when we're in a massive uptrend anyway, I would kind of go, not really sure I actually want to short that hourly now. But again, we'll see what plays out. There's also a 4-hour. Oh, actually, so yeah, and yeah, okay. So I didn't check the 4-hour. This is actually a 4-hour demand in here. So yeah, that was again a viable long entry, and I wouldn't have been shorting against this 4-hour demand. So now at this point, I probably would expect this to take out the hourly supply, particularly now with the 8-hour put in. So I probably wouldn't be shorting this hourly supply. I have no idea if it works or not, but it's just become significantly lower probability based on what I see on the chart right now. Still would have liked the long down there, but you know, I haven't been given it. There's a lot of 2-hour and 1-hour demands in here as well that I'm just not drawing in at this point. Okay, so we have still rejected the hourly, and now we're back testing this local 4-hour. There is a 2-hour supply up here. Again, just need to go back and see what time frames. We did make a 12-hour demand in there as well. Oh, okay, now we're going to drop, it seems. So we've got that 8-hour demand. We did actually make a 12-hour demand just below there. So I'll probably put that down because that's a bit of a nicer entry and a nicer zone. But now at this point, okay, so we've dipped into this very weak 12-hour demand. We did get the rejection here, so it actually would have been a nice trade, but one that I probably wouldn't have taken because of this 8-hour, 12-hour demand in here. We've still got that bigger trade off the Fib, which is still holding quite nicely. And now potentially we're going to create a new 8-hour supply here. I'm not sure if that would have happened, depending on what time frame we're looking at. Okay, so price is starting to drop. We've made, you know, there's going to be an hourly supply here, might be the 8-hour. So now given we have the 2-day supply, if we've made an 8-hour supply, then I'd be getting it again more confident on the short side. So I guess you can see, I don't know if you're getting bored by now, but I guess you can see that the effort that goes into scalping these low time frames, and it's not just as easy as you know, if you want to scalp, it's not just as easy as just throwing in entries and walking away. If you want to scalp, then you really need to be on top of the chart and on top of every time frame. So you can see now we're running through this zone. So I'm going to go back up again and check what we had on the 3-day. So this point is when we have the big drop off. So we've now, and this is, I think is now on the chart, but it hasn't been tested yet. So we've also created a 3-day supply in there now. But again, 2-day. It's going back to look at what's actually happened, you know. So on the high time frame, it's really quite obvious now. And you're like, well, that's easy, you know. You could have just shorted off this 2-day, came up, you know, to the 78 fib inside it, did take some stops, and has dropped. It's also going to create a 2-day supply here. From a daily perspective, you know, a little bit harder. You know, we did have a daily supply here, but again, like I said, your risk of the chop and the triangle zones, we've taken that out before a drop. It threw us off by creating a 12-hour supply here, but it's now flipped that supply, by creating a 12-hour demand there, but it's now flipped that to supply, and you can see it's actually rejected off that level on that wick. And then we also have this 8-hour supply. I'll just change the color of that in here. And now, you know, I don't know if this is now the start of the big drop, but again, we're back on this hourly demand. Again, we've got the risk on this hourly demand that it's now spent a lot of time consolidating in here. It's taken the stops above there. Would I still take this long? I don't know if I can say it in an unbiased way, to be honest. Like, you know, yes, there is a possible long here. It's an hourly demand. We do now have a lot of supply above here. The reason I'm saying I don't know if I can do it in an unbiased way, but I'm actually not sure what happens if we do get another run before this drops, or if this is just going to drop. I guess this is just going to drop, actually, because we're now 2 days ago, or 3 days ago. But yeah, so I don't know, like, if I would look for a long in here if I was trading this in the moment. Possibly not now, because I mean, at least even unbiased, you know, it has come off supply here. It hasn't managed to break, you know, that zone hasn't managed to break higher. If it had broken a lot higher, then yes. And it hasn't had the immediate test that I would have wanted, and it also isn't in this daily demand at the base, which I would have preferred. So let's just check the 4-hour, you know, and it really is starting to build a significant amount of supply above now. But it's looking now, you know, are there any other short re-entries? I think I've done a lot already, but again, would still potentially, so let me just remove this if I wanted to add again into this trade. Obviously, I'm running the risk that we're going to make a higher low, so the possibilities that you're looking at here from a wave perspective, again, you've still got this large up move, you've broken some local stuff in there, and we're still in this large, so again, this could still happen. So the bullish thesis here is that it's come down here, it's made a low, it's going to do this, it's going to retest, and it's going to make a high here. I don't know if it does do that or not. I'm guessing not, because we're running out of time. But that's the bullish thesis. So again, would I want to be shorting in here? I guess probably, you know, I would need to see the bounce off this zone first. I don't like, you know, when we've got choppy zones like this, because it can run through them. But yeah, so if we get a bounce off here, then I probably wouldn't look at shorting in there, or at least I would then start to think, okay, now we're making a much bigger triangle. Obviously Ripple loving its triangles, and are we going to take some more stops from there? Okay, so we've got that drop down into the hourly, and it's gone through it. Okay, so yeah, so that long would have not worked, and that's when we've obviously started to get the bigger drop now. We are down into the 2-week demand here. So again, as I've said before, you know, this for me is a weak demand, so it's not something that I would have wanted to long. I'm not sure if we're going to get a pre-bounce here before the bigger drop, but let's see. But this is the daily zone, and at this point in time, I think we're now, actually the 3-day hasn't confirmed, but we've now got the new 2-day supply above. So this is just going to go straight through it now. I think maybe I've done enough on this anyway. But again, you can start looking at, you know, if you were confident, more confident here, you know, once you've seen this zone break there, and it's just made a 4-hour supply, made another 4-hour supply, you know, so this happened over the weekend. And these ones I struggle with a bit, but they're actually fairly easy. You know, if this has started this reasonably strong trend here, if you're not confident of this demand, there is no reason, again, when it's made a 4-hour supply, you can't just enter there with a stop above there and hope for that bigger move down. You know, it's a very clean, that would be a clean 4-hour entry there. The problems I sometimes have is that I tend to want, you know, those bigger retracements. So, you know, I would potentially want it back up there before the bigger drop. But if it's going to build up momentum, then those aggressive entries obviously are the way to go, and in this case, you know, then we got this massive move back down, wicking through there. Yeah, so I hope that's useful. As far as what we're doing now, like, I don't know. So now we've taken stops off the low, you know, it is possible we come back and take stops off the high, but we've got that 3-day supply in there now to be watching out for. But I just want to see a bit more follow-up PA on this. So unless, you know, you FOMO'd the bottom on this, obviously there isn't, you know, may or may not give entries on the long side. So obviously I wouldn't have got a long off the low there. You could have taken it off swing failure if you were watching it. But again, this is one of the examples I think I gave when I said you may not wait for a break of supply if supply is far away. So in a situation like this is probably a final example I'll give. You know, in this case I'm only looking at one time frame, but hourly supply was up there. That was your last drop down. So if you wait for this supply to break before, you know, for a more confirmed or confident long entry, then obviously price can be all the way up here, and we see the same on Bitcoin at the moment before we're going to get a retest, and it may not retest down there, so you might miss the whole trade. So in a situation like this where you've got a gap to supply and you have a new demand in play, then potentially you can look for a long entry. You know, this has already potentially got it, or you might get another one on the rounded retest for a move up. At least that gives you, you've got space to supply. But yeah, I mean, the lower time frames might give you more detail on this. So as we did have a 30-minute in there. So they can be challenging when you have these big wicks, and which is why I tend to avoid trading them. But you know, once you do have the big wicks, it's exactly the same. Like, I'm less concerned with where supply is, except for the higher time frames, but I'm very concerned about, you know, what new demand's being put in that I might be able to get an entry on if we're going to start retracing these big wicks. Anyway, that's enough examples on that. I think I've covered a lot on that from both sides, from both the long and the short side, and obviously this is more the short bias because of there, but you're looking for the same things in reverse if you're at the lows, and I think I gave a decent amount of examples at the lows on Ripple of how you get those entries and the different time frames. But I hope you can also see from this anyway, just to summarize, you know, how that it can be pretty complex, but it really is the time frames more than the supply and demand. Is if you get overwhelmed by the time frames, then start limiting yourself to only certain ones. Also the other difficulty is not entering too low time frame in a high time frame zone. So, you know, if you are on a monthly, and I probably didn't really give an example of that, but I won't go back to the chart now. If you are in a monthly zone, don't expect the 15-minute to give you a reversal on that same moment that the alert's gone or that the zone is hit. You know, it can give you a V-shaped reversal, but it also can take weeks. And as we saw even in the Ripple example, actually, you had that monthly demand. Yes, it did actually get an immediate bounce off it, but it took 6 months before it actually made the big move based on that the swing fell into the monthly demand. It took a very, very long time. So yeah, for how I trade, because people keep asking me, I've pretty much covered that I think anyway, but predominantly I'm using the low time frame supply and demand strategy and Fibs. If patterns exist, I'll use them. And I occasionally look for divergence, but not really for trade entries myself. It's more like when I'm when I'm indecisive on something, probably on a higher time frame of like Bitcoin dropping or something like that, and I want to know, you know, if it's going to be ready to turn around. And those situations, you know, if it is in a monthly zone but is taking weeks to move, I might see a higher time frame divergence or look for that before the big move happens. And yeah, so predominantly those. I don't really use, occasionally all the other things I occasionally will put on my chart just to view them, but I rarely do the catching a knife except for the Ripple example that I gave. I think that's probably the first time I've done that, and I find it very stressful. I'm just not patient enough, to wait for the big move. And like I say, I FOMO exited at $1 because I was bored with watching it. I was so happy it finally did something. So yeah, I don't think I'm built for that, but maybe you are. And yeah, the final page of this is the Forex chart patterns. So I hope that's a helpful video. It obviously was a little bit off the cuff, bar following my notes in here. I'll put this, as I said, in the comments of the, or are in the notes for this video, so you can read this as you go and also keep it for your own notes. And yeah, the major takeaways, I guess, are you can make this as complicated as you like. It doesn't have to be, but the complexity is pretty much, in my opinion, always in the time frames that you're using to trade. Yeah, with the balance being the higher the time frame, the more likely you are to be right. However, that will dramatically reduce your risk to reward. So maybe go back to the win rate versus risk to reward in my risk management document, and have a look at that and see that, you know, if you can have a very low win rate but a very high risk to reward, and that's fine. But you need to find your balance between the low win rate and having a high enough risk to reward, or having a high win rate but a low risk to reward, what you're comfortable with your lifestyle, and, you know, make sure obviously those are balanced such that you still make money. I might drop in the end of the document that win rate risk to reward chart so you can have a look at it and remind yourself. Anyway, yeah, please let me know if you have any questions on that, and I hope it's useful 2 years later.